Well, I don't think they can turn it around. I mean, we're beyond that point. We're in the largest credit bubble in history, and it's the consequence of earlier credit bubbles not being allowed to wash out the malinvestments, that occur in a credit bubble. They have also been enhanced by government intervention, by budget deficits, which is, printing currency into the economy, if you like. And it's just all rolled up into one huge, great tsunami, which is going to break on our shores. When it does, it's goodbye to equities, goodbye to bonds, goodbye to virtually everything, actually.
On this episode of What the Finance Podcast, I have the pleasure of welcoming back one of our most popular guests, Alasdair Macleod. So Alasdair is an educator for sound money, economics, geopolitics, and everything to do with gold and silver and what is happening in the world. So Alasdair, thanks so much for coming on the podcast today.
That's my pleasure, Anthony.
Look forward to speaking, and as I always do, and I'd like to start very broad, and you can take it in whatever direction you want. What are you currently seeing in the world?
We're sort of, apart from gold, which is quite spectacular, the rest of the world's sort of gone to sleep. You got Trump bouncing up and down and confusing everybody. But if you look at markets, they're in a stasis, really. There's a sort of uncertainty, perhaps, about the situation. Bond yields have ticked back quite a lot, but they don't seem to be going any lower at the moment. Equities, sort of maybe a little bit off the top, but not really coming off. It's only really been gold and silver, but particularly gold. I mean, gold has led silver quite strongly. If you look at the gold-silver ratio, it's risen as we speak to around about 91, which is more or less the high it's been for a very long time. Otherwise, there are a few things going on which people don't notice. I mean, for example, the Japanese government bond market is weak. The yield there is rising to a staggering 1.31% on the 10-year. That's quite a lot for Japan. So there'll be really quite large losses, I think, for the holders of those bonds, who are predominantly, the largest is actually the Bank of Japan. They own 60-odd% of the government's debt. So, but apart from that, no, things really quite quiet, quite normal. Just the gold price rising, I suppose, is the main feature.
Yeah, which is it's amazing because, as you said, it's sort of gone under the, not many. It hasn't got much attention, but when you think about it, it was sort of what is it, up 40% or so over the past trailing 12 months or so, or extremely high numbers. So it's actually pretty amazing.
Yeah, the point I always make is that very few people understand that it's not gold rising; it's the currencies falling. And once you understand that, you know that gold isn't expensive. Unless you take the view that suddenly currencies in terms of their purchasing power are going to get some sort of renaissance. But I think that would be a pretty extreme view.
Yeah, so the value of gold is the same as it's always been. It's just the depreciation of the currency.
Sure.
Definitely interesting. And I'd be really interested in touching on sort of your thoughts on the geopolitical sphere, because you mentioned there that Trump, and he sort of has been very boisterous, has been going at every country trying to negotiate, and then they just give him, apparently, it seems, what he's already been offered. So it's quite an interesting scenario. And if you can expand on your thoughts.
Yeah, we know about his desire to replace income and corporation taxes with tariffs, not Trump's tariffs, and that battle is now being fought in the international arena. We had steel and aluminium, 25% tariffs on that, and of course that's got the European Union jumping up and down, as you may expect. I mean, I think the tariff war is going to be a war. I mean, we're going to have tit for tat, and we're going to have a similar situation, I think, to really sort of after the Smoot-Hawley Tariff Act of 1930. we've got the additional problem that you didn't have extended supply chains around the world in the 1930s. We do today. So that is an additional factor, which I think is disruptive. I think that's very, very bad, and I think it's going to drive the world into really quite a deep recession. I mean, we are already in a recession. If you take out the inflation of GDP by government spending deficits, I mean, the budget deficits basically enhance GDP. If you want to get GDP up, increase the budget deficit. But what it does mean is that the underlying economy, the private sectors, are not doing so well, and if anything, they're contracting for lack of credit, if you like. But I think more interestingly, Trump's desire to wind up the Ukraine war, I think, is initially very, very divisive, because Europe has got to sort of switch its mantra from supporting Ukraine to, I suppose, welcoming Ukraine and Russia back into some sort of trading fold and all the rest of it. And I do think eventually that's likely to happen. Putin is winning that war, and I think that the American deep state, which pushed America and the rest of us into this conflict, basically has failed completely. So that, I think, is a major, major event. Putin will win this war. He will get what he wants. He's not going to sit down and talk to the Americans unless he is going to get what he wants. And that's basically NATO out. And he's going to keep the bits that he wants, which are really the Russian-speaking oblasts and Crimea. And he will want to see a Ukrainian government which is, I think, more aligned with Russia than with NATO. Because the Americans have a history of reneging on treaties, deals, agreements with Russia. And I just don't see, I mean, if I was in Putin's shoes, I think, they speak with forked tongue, not to be trusted. So I think that there will be a treaty, if you like, on this. I mean, some are calling it a second Yalta. But I think, that's going to be the headline stuff. I think the underlying situation is that Russia will only come to an agreement on the basis that it has some degree of control, a great degree of control over the independence of the rest of Ukraine. So that means a new government. It means Zelensky's out. It means peace, and that would be great. I mean, it would be great for Europe too, because I think that after a period of time, and hopefully not too much time, trading relationships between Russia and Europe will be restored. I mean, that's really what we need. And the only reason we don't have it is because the Americans insist on not having it, on us not having it. Of course, we kowtow to the Americans. So that, I think, is going to be a very interesting area to watch. When it comes to the Middle East, I don't think that's so easy for Trump to withdraw from. I mean, he's made, certainly to my mind, and I think most rational people's minds, a ridiculous proposal of kicking all the Palestinians out and redeveloping Gaza as some sort of, repeat of the south of France. This is completely untenable. And I think all Trump is doing is he's making enemies for himself in the Middle East. So that's not good. So I think he's going to have to concentrate on that, because the lobbies in Washington, I think, insist that he does. But Ukraine, I think he needs to get shot of that, which is good news. And by get shot of it, I mean basically walk away from it. And I think once he walks away from it, of course, the future of NATO itself is going to be another interesting story. But the main point about it is that with America withdrawing from the international scene and making America great again, concentrating on the Americas, North America, Canada, Mexico, America. I mean, hoping they'll all become extra states to the good old USA. And also, I think that he will probably encourage greater links with South America, which puts Brazil in an interesting position as one of the founder members of BRICS. But apart from that, I think the rest of the world could find its sort of somewhat freer from the threat of American intervention. And that's going to be very good for the Asian hegemons, China and Russia, and their plans to develop trade and influence over the rest of the world. So that this could mark a major turning point, I think, in the whole of the global geopolitical situation. So we watch this with really great interest, Anthony.
Yeah, it sounds like I was talking to Doomberg and a few other commentators, and they've said a return to the Monroe doctrine of the US focusing on the Americas and leaving the rest to the rest of the world.
Yeah.
Yeah, and then I think this it does sound quite bad for Europe then. So Europe sort of, because if we look at it, the past, really 2 decades, it's been decimated really.
It has been decimated, but I think the point is that if America does withdraw from from the European Eurasian scene, as it were, I think that's going to be very good news for Europe. I mean, it may not be immediate because politically they've got to turn around, and you've got sort of rather peculiar governments both in France and also Germany. You've got political instability domestically. But if you look at it, sort of slightly more optimistically, once Ukraine has, once that ridiculous situation has stopped, and Russia, the sort of the sanctions and all the rest of it are eased, I think that the trading opportunities, for Germany in particular, which has always been the economic engine for the EU, I think are going to improve very, very significantly. Not only with Russia, but also with China, because China was a major market for Germany, in terms of its technology, its high quality manufacturing, sort of machine tools and all that sort of stuff. I would be, I think this would be very, very good for Europe. I mean, Europe has been a mess, and it's still a mess, and economically it's a mess. It needs, I think, to have some sort of shot in the arm, and I think the ending of the Ukraine situation could provide that in time.
Yeah, it would definitely provide cheap energy, but I guess the challenge that Germany has is that you have this behemoth in China, which is now expanding its manufacturing into the products that you make, these super complex, vehicles, as well as other types of of products. And it seems hard to see how, their economy doesn't seem to be agile enough to be able to adapt to this change.
Well, I mean, in the past, the German economy has been extremely agile. I mean, the Mittelstand has been fabulous, absolutely fabulous. Politicians have screwed it up. If they just stand back and let the Mittelstand, if you like, German industry find its own way in this new world, and you're right to point out, I mean, Chinese technology and Russian technology on the missile front is better than anything we've got. That is for sure. Well, that was due to Trump and Biden. I mean, putting sanctions on China and saying, right, we're going to stop any of our technology being imported into China. What happened? They grew their own technology, and they're now surpassed everybody else. And they do it a lot more effectively, as they demonstrated with artificial intelligence recently, where they've got a machine which costs something like, I don't know, £5 or £6 million to develop against the 500 billion allocated in the US. I mean, they're making a joke actually of our approach to these things. Our governments, they can't organize light refreshment in a brewery. So what are they doing talking about AI? The Chinese actually just get on with it. And I think if you leave German industry, they will get on with it. They will find markets in the new markets which have evolved in China and evolved for China as well. They are there. I think that anybody standing on the sidelines, sort of trying to, dream up how Germany might sort of, come back and all the rest of it, I think is missing the point. The people who actually do it are the guys who actually put their guts and their capital behind entrepreneurial projects. And the Germans can do it. I mean, they've got a long history of excellence, and that does count for a lot. And that is still there if it's allowed to flourish by its stupid government.
And that's the risk. Not only do you have the individual governments where you get to vote, you have then the European government, which is another behemoth, which is, trying to control things.
Yeah, I mean, that should be shut down. It's not going to get shut down, but I mean, the whole of the EU is bust, and it's going to be more demonstrably so, and that hopefully will end up actually changing it. But no, you're right to point out. I mean, it's just the EU and indeed the UK are just overloaded with bureaucracy and regulations. It's just completely unnecessary. I mean, I think an imaginative leader post the credit collapse, which is, I believe, very much in the works. If you like, if we get to the point where a Millet type guy is elected to run things anywhere in Europe, first thing he should do is say, right, all regulations suspended, boom, like that. Don't worry about it. It's up to you to make your own mind who you're manufacturing for. And if you're a consumer, it's up to you to decide what you want. We're not going to tell you. And this actually would change things very, very rapidly, and it would be very, very good.
Yeah, let's hope it doesn't get too bad. But I guess that's a challenge. If the US goes into a bit of an isolationist with the Americans, what does that mean for the debt bubble globally? Does it accelerate the process? What does it do?
For the debt
bubble?
Yeah. Yes. Well, we're now coming, I think, on to the topic of the credit bubble, because the other side of a credit bubble is obviously a debt bubble, one for one. And America is actually in a debt trap. And the point about you need to take budget deficits out of the stimulus that it gives to GDP. If you then see that your GDP, your real GDP is actually contracting, then your tax base will not finance government debt. And so what happens? Well, the foreigners will walk away from your debt, and you'll find that bond yields start rising. And I think that bond yields are going to rise very, very substantially. I mean, at the moment, as I said earlier, we're in a sort of stasis where nothing's really happening, and bond yields have come off the top, and the ECB's cut interest rates, and the Bank of England's cut interest rates, and hopefully the Fed will cut interest rates once or twice in 2025. But if they do, they'll have to reverse it, I think, quite quickly. I mean, just looking at from the point of view of the purchasing power of our paper currencies, I mean, I don't know what you think, Anthony, but I find that they are actually, I mean, the sterling, we're both in the sterling, spending sterling. This purchasing power is going down and down and down. It's continuing to do so at quite a rate. And I don't actually trust the government numbers in terms of assessing, their measure of this, which is the CPI, or the retail price index. This is, this is now getting very, very tough for an awful lot of people. I mean, the poor in this country actually are finding it increasingly difficult to put food on the table, and I think that's ghastly.
And so if I look at what's happened over the past, 16 years, the pound is close to half the value that it used to be versus the US dollar. So really where this is the US dollar strength has actually allowed that population to be a lot wealthier. And it seems as if this is going to continue, because especially if you look at it, they're the cleanest shirt around.
The dirtiest shirt in the laundry. Sorry, the cleanest.
I don't know. I think that they're the cleanest in the laundry. Yeah, exactly. And then there's this, once this global event happens, and you'd imagine that everyone would then go into dollars or gold or all these other safe assets, but they would be fleeing these weaker economies. So it almost seems like it's actually, the US, it's sort of the milkshake theory where in this crisis, the US dollar is going to actually appreciate, maybe not as much as gold, but relative to everything else.
Well, it is bound to appreciate against the other currencies, because the other currencies, if you like, are lower in the pecking order. The dollar is everybody's reserve currency. But when you measure the purchasing power of the dollar against that of gold, there is no doubt that that's going down against gold. So if you want to look at a pecking order, gold up there at the top because it's real money and it's steady. You then got the dollar underneath, and then you got a whole load of other rubbish underneath that. And that's the way it is.
Yeah, okay. But then I guess that means that it's sort of a vicious cycle for the UK and Europe and other economies that are struggling, unless they can turn it around, as you were saying.
Well, I don't think they can turn it around. I mean, we're beyond that point. We're in the largest credit bubble in history, and it's the consequence of earlier credit bubbles not being allowed to wash out the malinvestments that occur in a credit bubble. They have also been enhanced by government intervention, by budget deficits, which is printing currency into the economy, if you like. And it's just all rolled up into one huge, great tsunami, which is going to break on our shores. And when it does, it's goodbye to equities, goodbye to bonds, goodbye to virtually everything. Actually, I mean, if you look at the effect on financing, I mean, the risk element suddenly really rockets. And nobody's going to want to buy your currencies. And this is an event which I think has been foreseen by China for a very long time, and this is why they have been accumulating gold. And not only have they been accumulating gold publicly, but more importantly, they've accumulated far larger amounts in secret. And so much so that they obviously thought that the state had enough gold to protect China back in 2002 rather. So we're talking about what, 22 years ago, 23 years ago. So they opened the Shanghai Gold Exchange and allowed their citizens to begin to accumulate gold. And since then, they've accumulated, 26,000 tons or something. I mean, this is what has happened. All the gold has gone over there. And why has it gone over there? Because the Chinese do realize that gold is money and the rest is credit. Whereas we've been prey to American propaganda, US Treasury propaganda, that gold is no longer in the monetary system and it's the dollar. Yeah, well, better find out that this is a big, big mistake.
Yeah, it's scary to think. Could it go the way of Japan, where if you look at, as you said, the BOJ owns most of the debt, so they should really just monetize their own debt?
Well,
no.
I mean, the difference is that Japan basically is a savings-driven nation, so you can have lower interest rates than you would otherwise have without generating extra consumption, if you like. And this has been Japan's trick, but that's coming to an end. It really is now. They went into negative interest rates, which was a huge, huge mistake. And the result is that the losses on the Bank of Japan's balance sheet are astronomical. I mean, they really are. They swamp its equity by tens or hundreds of thousands of times. I mean, I do not exaggerate. And the whole of the banking system is actually so highly leveraged that it just cannot take a spate of bad debts. And the problem with the credit bubble bursting is that it creates an awful lot of bad debts. Under those circumstances, I think the entire Japanese banking system will sink. I can't see any other solution to it, except print. In other words, expand credit as much as you can at the central bank level. But I mean, they've already done that trick, and their ability to do it much more I think is extremely limited, and it would certainly collapse the purchasing power of the currency. Any trust in it would go. And I think also the same is true of other nations. I mean, it's less stark in our case in the UK, but with the government that we have got, which has got absolutely no economic sense whatsoever, is I mean, they're running around saying, we want to promote growth, but again, they don't understand actually what they're talking about. On that, actually, they do share ignorance with virtually everybody else. All the politicians talk about growth, but actually what you see in GDP, which is what they're referring to, is growth in the quantity of credit in the economy. There is then the incorrect assumption that that growth in credit is being deployed productively. And by productively, I mean invested in production, producing things that consumers actually want, desire, whatever, not at the dictates of government. So, I would rather describe the situation of an economy which is working well as one that is progressing, not growing. Growing is a complete nonsense. Anyway, that's the mantra that everybody's got, and our government here in the UK is no different. And my goodness, they really don't understand the difference between progression and growth. It's going to be very sad, the denouement, as they wake up.
Yeah, it's let's not get started on the UK, and then the old lot weren't any better either. It's pretty crazy to think both parties can be as bad as each other. But I guess if we go to what is this flow of gold? I guess from basically it seems like all parts of the world to the east. What does that mean?
Well, basically, it means that we've bought the Keynesian Kool-Aid and think that gold is a pet rock. And there's old-fashioned chaps back in Asia who never had our level of education, haven't got there. So as far as they're concerned, gold is still money. But to be serious, gold is the only legal money around the world. And this was determined by Roman law going way back to around about 448 BC, when the first laws, which were known as the 12 tablets, were enacted. And tablet 7 made it absolutely clear what the difference is between immediate settlement, in other words, something is paid for, the debt is discharged, and deferred settlement. And that basically is the difference between money and credit. Deferred settlement is always deferred so long as, on the one hand, you have a credit, and on the other side, you have a debt. And that is basically the way the banking system works. It's the way currencies work, because if you doubt me, just look at a central bank's balance sheet. They have currency in issue as a liability. And the other liability, of course, in this modern day and age, when really we use banks and all the rest of it all the time, the other liability is what they call bank reserves. Bank reserves are basically balances in favor of commercial banks on a central bank's balance sheet. And it has exactly the same status as the paper stuff we have floating around the economy. This difference between money and credit is absolutely fundamental for us to understand. But, our political class, for what it's worth, has just completely dismissed it. And not only that, but, you get mainstream economists who don't understand the difference between money and credit. They don't understand money, period, actually. So, this is an accident waiting to happen. Those old-fashioned chaps in Asia aren't going to make this mistake because they don't understand where we were going with this. They weren't educated by us. Let's put it that way. They didn't buy the propaganda. I think they probably saw it for what it was. And so, when the People's Bank of China, which doesn't need all this gold, I mean, they've already got it, for goodness sake. When it sort of, plays around with its reserves a bit, it's not buying gold, it's selling dollars. Very important distinction.
So this means these countries are becoming wealthier while the West is becoming poorer from gold perspective.
Well, no. What they're doing is they're protecting themselves from our defaults. It's not a question of investing for wealth. It's protecting themselves from our defaults.
Okay, that makes sense. So, yeah, it seems like, as you said, once these defaults happen, and then I'm assuming there's going to be a new system that comes around, which is, I think you've talked about, potentially sort of a gold-backed currency or something else. Then that's when, yeah,
we're not. I mean, this is a difficult one because we should go back to tying the value of currency to that of gold, which is the idea of, it's basically a gold standard, if you like. We should go there. But intellectually, in the West, it's going to be very, very difficult to do because nobody actually understands, as I said earlier, the important relationship between money and credit. They think money is the currency, and they got that horribly wrong. There's going to be a huge, great re-education process, not just amongst the politicians, but also amongst the intellectual economic community. And that's something which can be quite difficult to achieve. I mean, I'm not saying that it can't happen, but I think it would be a big step in the imagination to assume that it's something that's going to happen quickly and easily. And of course, the other thing is that when you get the sort of disruption of a currency collapse, that basically creates, if you like, unintended political consequences, to put it that way. We're getting back to, Hayek's road to serfdom in this description, because you find that people who have been impoverished start shouting, "We need a strong leader to get us out of this," And so what did they get? Germany got Hitler. It's which is another form of socialism, incidentally. I mean, Nazism is socialism, and the reason that the left wing hated it is because it's a rival to their brand of socialism. It's got nothing to do with free markets at all. We need to get back to free markets, and I can see that there are likely to be several attempts to try and get it right before we actually do get it right. So the idea that we could get a currency collapse and somehow a phoenix arises from the ashes and we can sort this out quickly, I don't think so. I would wish so, but I think it's quite unlikely.
Yeah, and it does seem like there's that sort of provides a catalyst for a potential global war, which would be very negative.
Yeah, I don't know about a global war. I mean, that's that's just a horrifying thought. I don't think this is the bones of something for a global war. But I mean, yeah, you can't put it past the political class to try and divert attention from the enormous problems that they have created in their own economy by declaring war on someone else. Try and reunite the nation. I mean, you can't dismiss it. Just hope it doesn't happen.
Yeah, let's hope not. So it sounds like you see there's going to be a sort of almost a multipolar world: the US, China, potentially Russia, and sort of Europe. These are going to be the spheres, and then the vacuum is probably going to be split between of countries is going to be split between these regions.
Yeah, I mean, that left on its own, I think that would work out well. But the problem is the credit bubble. The credit bubble is going to destroy the current monetary and credit system. And it's how we manage that, how we perhaps stand back and not manage it and let things sort themselves out. Whatever process we go through on this, I think that's actually turning out to be the more immediate problem that we all face. I mean, I can see this trade war, which Trump has got going. I can see that undermining our economies really quite rapidly. We have, as I said earlier, the largest credit bubble in history, and all credit bubbles come to an end, and they tend to come to an end quite violently. And given that this is the largest ever in history, I would have thought the violence in this one is going to be really very, very nasty. And that, I think, is going to become the main consideration, and it'll transcend things like, how nasty is China? How nasty is Russia? President Putin, we don't like it, whatever. I mean, that's all going to be very small stuff compared to the consequences of a credit collapse.
Yeah, definitely. So, Alasdair, thanks so much for coming on. Really appreciate the in-depth discussion on credit, and it all links back to credit, as you say. But my last question is, what is one message you want people to take away from our conversation?
Well, I just want people to take a little bit of time to try and understand the difference between money and credit. And I write about this on my Substack, and I'm glad to say that it's getting quite a following. I'm beginning to see that people are beginning to buy gold as individuals. And I think the people who are doing it actually have in the back of their minds, they may not understand it fully, but they have in the back of their minds that actually what they're doing is they're getting out of, this government currency system, which is looking increasingly wonky. And I just want as many people as possible to understand that, to protect themselves and also their own communities, because a collapse in credit is, and the ultimate collapse in credit, which takes currencies with it, the highest form of credit, if you like, is disastrous for everybody. It really is, and you need to protect yourself from this. So that's the point behind my Substack, which people, I think, I think that they do themselves a big favor by just taking a bit of time. I mean, it's not just me, but I think there are other, there are other people who are covering this subject quite well. And just for goodness sake, educate yourself about it, understand it, follow it. And I think, above all, realize that when you buy gold, or, to a lesser extent, silver, it's a slightly different situation. When you buy gold, you are actually getting out of credit. And that's the important thing. You are de-risking things. You're not buying gold, you are selling credit. And that, I think, is a very, very important point.
Yeah, amazing message. So, Alasdair, thanks again. If anyone wanted to find out more about your work, you mentioned your Substack there. I'm guessing X as well are the best places for it.
Yeah, well, X is sort of brief comments, and it's probably more market related than anything else. But my Substack would, gives you a broader feeling, if you like, for the geopolitics, for the economics, domestic politics in the case of America, and also the UK in particular, though I do write about other nations, and also the ins and outs of what's going on in precious metals markets and so on. And I think, basically that last is really to encourage people to follow them a bit more and understand them, and have a stake in them.
Great message. So thanks again for your time.
My pleasure. Thank you for having me on, Anthony.
Hey everyone, thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, good or bad feedback. I'm always open to that, but it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching, and see you on the next show. And you also might like this video right here. All right, thanks again.